I want to welcome you to another exponential webinar, this one with a very special guest that I'll introduce in just a moment. But I think we all know how Zoom works now. It takes just a few minutes for folks to be able to enter into the conversation. So we're letting those numbers pop up. I know several hundred have signed up for this webinar as well. My name is Ed Stetzer. I lead the Billy Graham Center at Wheaton College, and we're having a conversation today around the CARES Act. For those of you who are not aware, the CARES Act is actually an acronym for Coronavirus Aid, Relief, and Economic Security Act, known as the CARES Act. It's meant to address the economic challenges, the economic fallout from the 2020 coronavirus pandemic now globally. Specifically, this is a part of the relief plan in the United States. The original bill included over $500 billion in direct payments to Americans. And for the first time, also included faith-based institutions and organizations, which are generally left out of relief efforts, actually leading to many conversations and even Supreme Court cases during hurricane relief and other aspects of disasters. And today, we're very pleased to have with us Senator Marco Rubio. He serves the state of Florida, and he has prior served in the Florida House of Representatives. He was actually a former candidate for president as well. What I know of him is that he has occasionally attended Christ Fellowship in Miami, where Rick Blackwood is pastor, and I've served prior as teaching pastor. And so super excited to have him here on the conversation as well. Let me mention to you that we're going to actually do your questions in a little bit of a different way as Senator Rubio and I talk. If you want to enter into the Q&A or to the chat, we invite you to do so, and then our team, Brooks, will actually share with me those questions, and we'll jump in the course of a conversation. Senator Rubio, thank you so much for joining us in the conversation today.
Thank you. Thanks for having me on.
Good, good, good. Well, let's jump right in, because I know that early on, you were actually a key player in bringing in faith-based organizations, particularly 501c3 and other nonprofit organizations into this Relief Act. And that's not without controversy, and it's certainly different from historical emergency declarations and funding that came from those. In many towns, you could see everything else rebuilt with maybe federal funds after a hurricane or a tornado, except sometimes churches. So why did you desire to bring churches and other nonprofits into this? What was your role in that, and why is it important?
Well, we actually didn't have a lot of opposition to it, surprisingly. I mean, in Congress. I think one of the reasons why is because the design of this program was really to help workers, hence the name, the Paycheck Protection Plan, the Paycheck Protection Program. It really wasn't about helping businesses, although it does, but it's to help businesses keep their workers on staff and not have to lay them off. In essence, the choice was between continuing in dignified work or having to stand in line somewhere and try to draw a check from the government. And the goal was to keep as many people as possible connected to their employer. And so obviously, you know, when you look at the small business sector as the place to start, and then you add to that, of course, as well, the independent contractor workers, people that drive for Uber and the like, the next logical step is this massive sector known as the 501c3 universe of all sorts of organizations, churches included, who employ people, who have these people have jobs, and their jobs are just as valuable and just as important and just as dignified as anybody else's. And so in a catastrophe like this, where literally no community in the country is unaffected, we wanted to make sure we took care of workers across various sectors. I think added to that is the notion that in a time like this, where there's so much need, so much uncertainty, so much fear and anxiety, it is many of these organizations that are going to step in to fill the void, be it through feeding people or caring for people, or in many cases spiritually as well in a time of extraordinary doubt. I mean, it's an amazing thing to think about. This is the first Easter in the history of this country in which there won't be any church services. I mean, there will be online, but imagine if we didn't even have that. So that's, in some ways, the internet's a curse, but in this way, it's been a blessing, right? That we can connect today, and also that we can celebrate Easter in that way. But so it's an extraordinary and trying time for our country. And I didn't feel like there was a tremendous amount of resistance. I think our biggest fear was in the way the law would be interpreted by regulators might leave people out. And I have to credit people like James Lankford and others who really took, Tim Scott, who took a lead role in ensuring that that was written the appropriate way.
Yeah, you mentioned Senator Langford, of course, who's a Southern Baptist, Senator Scott, who attends church in Seacoast Church in South Carolina. And you two are a person of faith. For those of you who want to know more about Senator Rubio's faith, we actually did a two-part interview. Brooks will drop that into the chat about his faith during the last election season. And one of the more fascinating conversations I've ever had with someone who's a politician who clearly knew a lot of theology. So I found our conversation fascinating, Senator. So one of the things you mentioned is how regulars might interpret these things. And we saw there was an interim rules and interim final rules, and then another set of rules. Tell us just broadly, I know you don't work for the SBA, I know you're not a banker, but tell us broadly
I feel like a
what
banker
we could expect
after the
or
last
see.
week. Yeah, I feel like a banker. I'm joking. I'm not a banking expert. I was talking to the chairman of the Federal Reserve yesterday and said, I've learned more about banks in 7 days than I ever wanted to know. But the process by which that happens is, they have to, anytime you write a law, there are now a set of rules that have to be written to apply them. And especially in banking, because the banks are the ones that are administering this program. They're the ones that are taking the applications. And that was the right way to do it. Had we tried to do it through a government agency, we wouldn't even have started yet, much less had the amount of uptake that we've seen. And banks are highly regulated. And so you need to tell them in writing, their lawyers want to know in writing, they want to see it from a government on the letterhead, that this is what the law means. And so one of the open questions is, because the SBA has never lent money to the not-for-profit sector. Now it has for emergency loans, but that's it. But in the regular course of business, it does not do SBA loans. There is no rules on that or on the issue of association, which is, what if you are a member of a church, you're a church, but it's part of a broader and bigger denomination. Does that count towards the 500 employee restriction or not? And that becomes a real big challenge, especially in some of the liturgical churches. So all of that had to be interpreted and applied. And so it was really important that there be flexibility, and that the outreach of myself and these other members was about the intent. What was our intent in writing the law? And our intent was to be inclusive, not exclusive, and cover as much as we could in the 501c3 sector.
Yeah, and I think a lot of people, that raises a lot of good questions. First and foremost is, how can we participate? What are the steps to do that, and more? Now, our understanding is that you go to your bank, and of course, early on, a lot of banks didn't yet have guidance. We're not shocked by that. This is a huge new bit of information. So it's a loan that has a potential of being forgiven as well. So we go to the bank, and how do we work through the question of the forgiveness? Give us more details about that.
Yeah, absolutely. Well, first of all, let me say this is a program that didn't exist 2 weeks ago.
Right,
So
right,
it was created
exactly.
2 weeks ago yesterday. The federal government had 6 days to stand it up. And despite all of its complexities, it is the only part of that bill that's actually operating. In essence, people haven't gotten their checks yet in the mail. The unemployment system is hit or miss in many states, but they're already, as of 2 p.m. yesterday, $100 billion in these loans had been made. So how it works is, I'm just gonna give you like the easiest scenario, is you go to the bank that you normally bank at. They've already confirmed years ago when they opened your account that you really are a 501c3. So that part's taken care of. And then you, the borrower, have to estimate you have to look at your payroll. What is my monthly payroll? What was my monthly payroll on February? If today was February 15th, what would my monthly payroll be for this month? And then you get 250% of that. And that becomes a payment that gets deposited into your account. A year from now, when the books will close on that transaction, you have to, two things are going to happen. Number one, you're going to be able to say, here's how much I took out. So let's say I took out 30,000. This is how much I spent on payroll, at least 75%. Remainder of it used for benefits to those employees, for our rent, for our lease, for our utilities. And as long as you can show that that's what you spent all the money on, 100% of it becomes forgivable, goes away, and the story's over. If any percentage of that, any portion of that money you took out is spent on anything other than those things I just described, then the rest of it, that portion becomes a loan, a 1% loan that you have to pay back. Our sense is that the overwhelming majority of this money, the overwhelming majority of the loans are going to be spent that way, and the overwhelming majority of the money that's lent out is going to be spent in that way, because people do want to hold on to their employees. They're not replaceable in many cases, or at least not easily replaceable.
Yeah, and I think the distinction that you made is important, because I mean we can go back to Ocean Grove in Hurricane Sandy and the FEMA denial because they were a faith-based organization of the emergency funds there. So historically there has been a not involvement in those faith-based organizations. And you said you've received very little resistance. We already know some lawsuits have been filed. There's always a group that files lawsuits. We all know that. But so is there any chance, should we be concerned that a year from now, when the lawsuits are heard and seen, that this might no longer be able to be forgiven, or are we good to move forward with this?
Well, it's a unique question. But I don't see how you could I don't know how any court could possibly rule that the money has to be paid back. I think a court could rule that's impermissible, and I don't know what penalty it would try to impose on the federal government for having this purpose, but you're not going to go and claw the money back.
Okay.
And I don't think anybody foresees that. But I think there's a separate distinction here as well, and that is that when it comes to this program, as an example, right now, people who are in ministry, if they've made less than $75,000 as an individual last year, which most have, are going to get a $1,200 check in the mail.
Right.
So this is the equivalent of that. The only difference is the money, it's not being used to fund the operations of a faith-based organization, nor does it create any sort of endorsement, because it doesn't discriminate between denominations or even faith. It's not even faith specific. In essence, it also applies to other 501c3s that are not faith-based, or their mission is not faith-oriented. And so I think that the distinction here is you're not supporting the operation, you are supporting workers.
Right.
You're supporting their salaries. In essence, you're going to pay for it one of two ways: through unemployment or through their employer. And we've chosen to do it through their employer. So I think this is completely defensible. I don't really think they're going to be successful at any lawsuit. And even if they did, their recourse would be against the government, not
Right.
the individual entity.
Fair enough. And of course, for those who may be thinking, how does this work? Think in terms of Pell Grants, federal grants that go to students, and students then would use them at a Christian college or any school, a Hindu school, or whatever it may be, because the money is going to the students, just as this money here is going to the workers. One question too that I've been asked a lot about this is, all right, so a year from now, when we start to pay back these things, we could have a different lineup in the House, the Senate. We could have a different lineup in the White House. I'm not making a political statement other than just the reality is we have an election. Can the terms of forgiveness be changed by subsequent administration in such a way that might put churches where they might have violated their faith beliefs about them, about the beliefs of maybe their staff or things of that sort? Is there a scenario where these rules could be changed, or are they set and you just have to follow those things? Because I know early on, the interim rule was different than the interim final rule.
Yeah, and these are interim final rules. And the reason why they write interim is because there'll be adjustments made to them over time, but not in the opposite direction. No, I don't think you can. There'll be, sort of trying to come back, and there's all kinds of legal principles for not doing that. Whoever's taking this money now is doing so on the basis of an application and a promissory note with the terms clearly delineated. So once you sign that, once you enter into that contract with that lending institution, you can't come back and unilaterally change the terms of that contract on someone. That's just a factor in the law that you can't go back and change. So I don't foresee that. I don't know how that could possibly be used against anybody. It's right to be suspicious because you just don't know what comes next. But I just don't foresee that. I don't know how you could possibly do that once you've entered into a binding contract on assurances made by the government that this is what the law is and this is how this is going to work.
Okay, good. There's several questions coming in. I'll just share some of them as we go. And let me just remind all of you too that, Senator Rubio was a key player in creating this and putting this through, but Senator Rubio is not a local bank, and Senator Rubio doesn't work for the Small Business Administration. So some of the details may be things that might be addressed better with your accountants or your banker. But David Clark asked the question, we received a PPP loan, but how are they going to calculate forgiveness? Is still a little foggy. We have until June 30th to have levels back up. What period of time will be used to show what? Is it the last week of June? So how does the timing work? At what point do we need to get our staff back?
So June 30th is the cutoff of the program, but if this program is still there June 29th, or you take the money on June 29th, you can't possibly do 8 weeks of payroll in one day.
Right.
So really the key is from the time the funds are dispersed, and what they really want to see is they want to see that the money was used to keep your employees on payroll. That's why the 75% requirement is there. Now you can choose not to, and at that point it turns into a loan, but the safest harbor here is spend as much of it you can on payroll and avoid spending on anything that's not payroll, not rent, not if you don't want a loan, then avoid spending it on anything that's not utilities, rent, lease, and payroll, because that's guaranteed to be a loan. Now, there's provisions in there for mitigation that are not clear yet. And what I mean by that is it is possible that an employer could argue, listen, I am a seasonal business. I tried to hire employees back. I simply couldn't. I mean, I had want ads up for weeks. People had dispersed, or they preferred to be on unemployment because it's paid them more than my job did based on the additional money that was put into that. And there's efforts there for mitigation. That I can't tell you because that's not that we created a provision for mitigation, but that'll come out to how they try to interpret it. But what I can tell you with certainty is if you spend the money on payroll and benefits, you're not going to pay a penny of it back. And obviously you've got to sustain it over that period of time. That's why it's 250%, which comes out to about 8 weeks of payroll and about 2 weeks or half of 1 month of rent and lease. But obviously it gives you some flexibility, and as long as 75% of it is payroll.
Okay, so let's talk about payroll for just a minute. One of the questions that people have had, because we know that payroll includes like health benefits. Payroll includes, whatever benefits, even vacation is what I'm understanding is part of that. But what about this, and you may not know this, but what about the housing allowance that many clergy members would take?
So how it reads is payroll and benefits for the
Okay.
employees. And so obviously that would be a benefit that comes attached to the employment. And the reason why we did that is because in some cases, in addition to payroll, they may choose to continue to make contributions towards retirement or health insurance.
Right.
So it's payroll and benefits, and then also rent, lease, and utilities.
Right. So the payroll does include housing because that's part of typically the payroll, housing allowance, typically payroll.
I mean, it's a benefit.
Yeah.
And so it's a benefit attached to the payroll.
Good.
So my argument is it would be, and it is actually a very good point to try to get an answer on. I know what the answer is, but you want to see it in writing. And so it's those are the kinds of questions that come up when you implement something like this that have never been answered before. But we can get guidance on that. But I wrote the law, so I'm confident that benefits were part of it, and I know they were. And that's exactly what we meant by benefits. Sometimes the benefits attached to the payroll isn't simply the pay, but some of the things that come around with it.
Good deal. And I'll follow up with your staff too, if we could get that clearance as well. George Russ, who leads a network of churches in New York City, he asked this question. It says, our bank is doing online applications to PPP, but their application is not up and running yet. So and he says, I'm afraid the fund will be depleted before the bank is ready. What can be done at Citibank? And I would have thought they've been ready, he says, because a lot of what we heard early on, which I think is not true, but is because I heard Secretary Mnuchin address this, but is that first come, first serve, and they're going to run out of money. Is that something we should be thinking or no?
Well, it is true, first come, first serve in terms of the amount of funds. It's not an entitlement program, meaning, there's a finite amount of money that's been appropriated for it. And we're going to have to put more money into it. As I said, in just 4 days, despite the glitches, the program had already committed $100 billion. So that just tells you what the uptake is. I think today that number will climb even more substantially. There was an effort today to add another $250 billion. It was blocked by Democrats because they want to add unrelated things to it. But ultimately, I've warned everybody, at some time next week, we may hit the cap and the loans will stop, or at least the processing will stop, and you'll know who to blame. So I'm just hoping that over the next couple of days, as the program continues to improve, that the pressure will build to come back next week early and replenish these funds. I'm confident that at some point the funds will be replenished. I just don't want there to be any sort of interruption in a program that's already had a lot of confusion around it to add one more element of confusion. And by the way, the 250 may not be enough. It may require more. Yeah. But I remind everybody that every penny that's being spent through this program on payroll is a penny that isn't being spent on unemployment and on unemployment benefits. And at the end of the day, people are better off being attached to a job, even if the job is not functioning the way it used to, than they are being attached for 3 or 4 months to a government unemployment benefit that goes away.
Yeah, and the unemployment benefit has been substantially beefed up, which sometimes people have asked the question. I know right now that if we were to release some staff, they would be able to receive, even church staff, which haven't in the past been eligible for unemployment benefits, rather robust unemployment benefits. What would you encourage a church to do? Is it to prioritize keeping staff on and go with the PPP? Or would it be, is there still some benefit that people are still going to receive unemployment and it might be okay? Any advice you would give to churches?
Well, if they're on unemployment, they can't work for you. Right. I imagine when it comes to a church or a C3, they can volunteer, I suppose. But I think we'd all be much better off, including the organization, if people stayed on payroll. The goal here is to sort of keep things as close to normal as possible.
Right.
And there's a lot they can be doing, even though the church may not be having the full slate of services. There's a lot that still happens that needs to continue to happen, including long-term planning and other roles that they play. The challenge when that happened is that in many states, when you add $600 onto their benefit that they already give, there are people that are actually better off making more money on unemployment than they would on their job. And the concern that people had was that it would incentivize workers to go on unemployment as opposed to take their job back. In reality, what we have seen, as I suspected, is that the overwhelming majority. Now, there are people that don't fall in this category. There always is those people, but that don't fit the mold. But by and large, the overwhelming majority of Americans who are employed just want to have their job back. They'd rather be working because that's what they makes their. And they get up in the morning and they do something productive. We were created to work. I mean, from the manufacturer put that in the computer code when we were created. We were created to work and to be productive with our time. So the problem here has not been the worker. It has been, in many cases, the employer. We've seen some big companies say, well, we're going to lay everybody off because we think our workers are going to be better off anyway on the unemployment system. That's actually turned out to be a bigger problem. A related problem, which I fear we may see at some point, is the longer this goes on, a lot of small businesses are going to say, we took PPP, we tried to hire our workers back, but they won't come back because they're making more on unemployment. We're having trouble hiring people. It's undermining our ability to hire people or bring people back in. We haven't seen that yet because the funds haven't really started to flow yet, but that's something to be concerned about down the road. But the overwhelming majority of people would rather have their job or a job. And but some businesses, big companies have decided differently.
If you're joining us, you're listening to Senator Marco Rubio's key force behind the Coronavirus Aid, Relief, and Economic Security Act, which people are calling the CARES Act as well. We're taking questions in the chat, in the Q&A, excuse me, and I'm communicating some of those to the Senator as well. Senator, one of the questions that people have too is, what if we've already laid off some staff before this happened? And how does that work? And maybe they're already filed for unemployment. How does that work? Can we bring them back?
Well, you can. Once you've laid them off, if they file for unemployment, they have to voluntarily come back and work for you, obviously. I mean, you can't force them to come back. In some states you can, but most of you aren't going to do that. And so but it does allow you to hire people back. In essence, it provides you cash to bring these folks back, maybe even pay them a couple weeks that they weren't working. And so that's a big benefit to a lot of people to be able to do that and to hold on to the staff you have now, because the way we view it, especially for a C3, like there's no sector of our economy that's been unimpacted. Right now, your members are not contributing or are not contributing what they did before because they've lost their jobs. And so your revenues are going to come down at a time when you still have to do maintenance, you still have to do the janitorial service. There's still people that need ministry. There are a lot of people that are sick that need ministry and their families, and counseling is a part of it. And you still have to preach the gospel. The gospel has not been suspended. The gospel has not been quarantined. And so all of that needs to happen at the same time. And people need to make a living and be able to provide for their families. So the goal is to bring people back as close to normal as possible.
Yeah. One of the questions that is just been even surfaced again here from Eric: do the regulations include any non-discrimination clauses as a condition for the loans related to?
Yep.
Yeah, tell us what might be.
Yeah, very, very specific language that is alongside the same regulations that the Trump administration has put in place to be able to contract with faith-based organizations. It doesn't sound, when I say this, I try to explain it to people in a way, but de facto, every religious organization in the country, and from every denomination, every tradition and faith, a Buddhist temple, a Muslim mosque, a Jewish synagogue, a Catholic church, a Baptist church, are all discriminatory in the sense that every member of their clergy is a member of their faith, right? I mean, a Buddhist temple isn't hiring a Jewish rabbi, and a Catholic church isn't hiring a Baptist preacher, and vice versa. That's not discrimination on religious grounds. It's a precursor, a prerequisite for the job. Likewise, you can't put in place requirements that fundamentally force a faith to contradict the tenets of that faith, the very essence why they exist. So that language is in there, and I think to the satisfaction of most, or not all, that in no way is just taking PPP open you up to any sort of challenge or clawback because you continue to preach your faith and so forth.
Preaching, I would say, hire
grounds.
According to your faith and beliefs.
That's correct. And
okay.
I mean, schools have that concern as well, and others. I mean, at the end of the day, if you are running a religious organization, it's not that the law requires you to do so, but for the most part, you want to hire people who reflect and believe and are going to teach and model what it is you're trying to instill in your students. And that's the reason why those regulations under the Trump administration have been adjusted the way they have.
And it is important to note that those were adjusted, that there were different standards in the past. And so as someone at Wheaton College, that's an important distinction between those two as well. A question from John Monday. He's asking, under our denominational structure, all our churches operate under one 501c3. However, our local church funds 13 local employees. You're Roman Catholic, so in this the same tradition, same idea. So is each local parish eligible, or how does it work if you're part of a system with a bishop and all that?
And that was one of the big issues on association at the end that became tricky and had to be written a certain way. I think the design of it, and I've heard some people still raising questions about it at the banking level, but the design of it was to not discriminate against those sorts of situations. Because at the end of the day, even if they operate as one C3, the individual church unit, in many cases, operates as its independent entity. It has its own budget. Its employees, for tax purposes and accounting purposes, might be handled a certain way at the end of the year, but on a monthly basis, these churches or these individual locations are operating under their own budgets, under their own outlines and so forth. And so the regulations accommodated for that. What I cannot tell you is where that number cuts off. There are churches in this country that with just one or two locations have over 500 employees. So I'm not telling you every church in America is covered, but the ones who reach that number because they have various locations are being treated in much the same way as how you would, for example, a franchise situation with one of the franchises that's out there, Wendy's, McDonald's, and so forth. But it does. I can't tell you it works for everybody because I don't know the legal structure of every faith organization in the country. But there seems to be great satisfaction with the way that language was written.
Yeah, I want to remind everybody that Senator Rubio has been a key leader and a force behind the CARES Act. But again, he's not an accountant, he's not a banker, and he doesn't work for the Small Business Administration. Senator Rubio, what would you encourage? A lot of people are just unsure of what they should do. There's been a lot of enthusiasm for PPP among churches, but also maybe some caution, maybe because some of there were interim and interim final, and maybe it could change. You designed this, you put this forward with others because you wanted to help churches. Give us just a kind of a closing word. We got about 2 minutes left to honor your time. Give us a closing word about what you would say to churches, pastors, and staff who are just unsure what to do.
Well, for one is I would tell you the legislative intent of every single one of us who helped write it was to cover churches and other C3s and as many people as possible. That includes small businesses of varying sizes, mid-sized businesses, and independent contractors. So the legislative intent was clearly to be inclusive. Unlike other laws, this is not a law that's going to be around forever, meaning the people who wrote it are going to be around while the law is being implemented and operational and are very engaged. The people who wrote this were very, very engaged in making clear to the administration what our goal was. Because it's a short-term program that will end and expire during the term of this presidency, it's also helpful to know that we have an administration. No matter how you may feel about the broader political issues, we do have an administration that is friendly to that view. And that's helpful in terms of the way the regulations are written and being applied at this moment in time. Obviously, every church, every organization is going to have to make their own decisions about what's in their best interest and what they should be doing. But this is an option that's available to you and a good one. And being able to keep some percentage of your payroll on staff and be able to pay them at a time in which revenues are substantially down and uncertain moving forward. And it's not just about the church being able to operate. It's as much as anything else about those families who depend on that salary to be able to sustain themselves and their families without having to go on the unemployment line and so forth. That's really the goal here. It's why it's called the Paycheck Protection Act. It's not designed to support religion or faith or any organization. It's designed to support the people that work for them through their employer. And it was designed to be inclusive. And we are very, very engaged in making sure that that's what it is. And the interim guidance that's been issued over the last week, there's now 2 different guidances that have been issued that build on each other, has been very, very clear about these points.
Good deal. Thank you so much, Senator Rubio, for joining us. Thank you for listening to another Exponential webinar too. Let me just encourage you to, I know this is a strange time for a lot of churches and government funding is a strange thing, but it's not necessarily for your church, it's for your staff. And we just got off a phone call a little while ago with the president and the vice president about mental health. The government has the ability to do large things in times of crisis around mental health, around financial challenge and more. This is something normally I would back away from, but let me encourage you to think this through. Listen to the words of the senator, think through, and think how this might work for you. Thanks so much for listening to us on this Exponential webinar. Some of you are asking where I can get a recording for this. This will, of course, be published at Exponential site, exponential.org. Also, too, they are graciously allowing us to put this in our podcast, Leadership in the Coronavirus Crisis. So you can find that at coronavirusandthechurch.com. Thanks to Senator Rubio. Thanks to all the folks and the team at Exponential. God bless.